Hello everyone, and welcome back to Explain the Charts. Today, September 12th, 2025, we're taking an in-depth look at the S&P 500, ticker symbol SPY, as it continues its incredible run. The market has been making headlines, with the Dow topping 46,000 and both the S&P 500 and Nasdaq notching new records. This strong performance is largely fueled by expectations of a Federal Reserve interest rate cut, a narrative that has solidified this week despite some mixed economic signals. Reports highlight that while headline inflation, measured by the CPI, saw a slight increase to 2.9% annually in August, core inflation remained steady at 3.1%. However, the August Producer Price Index unexpectedly declined, a positive sign of cooling wholesale inflation. The real driver for the Fed's dovish stance appears to be a clear weakening in the labor market. Weekly jobless claims jumped to a near four-year high of 263,000, and significant revisions revealed nearly 1 million fewer jobs added over the past year than initially thought. Traders are now pricing in a greater than 90% chance of a 25 basis point rate cut by the Fed at its meeting next week, with many expecting 3 cuts by year-end. This bad news on employment is essentially good news for equities, as lower rates typically stimulate economic activity and boost stock valuations. On the corporate front, AI fervor continues to be a major tailwind, with tech giants like Oracle, NVIDIA, and AMD seeing substantial gains. Oracle, in particular, soared over 36% recently on a blockbuster backlog for its AI enterprise cloud business. However, not all news is rosy. Some segments, like shipping companies UPS and FedEx, were downgraded due to new tariffs, and Apple saw a decline after an uninspiring iPhone announcement. Overall, the sentiment remains largely bullish, pushing the S&P 500 into what MarketWatch describes as extreme overbought territory, a status not seen since June 2023. Now, let's turn our attention to the charts to see how these fundamental narratives are reflected in price action. Looking at the one-day chart for SPY, spanning from late April 2024 to today, September 12, 2025, we can clearly observe a persistent, strong uptrend. The market has consistently printed higher highs and higher lows, indicative of a robust bull market. We can identify several key support levels throughout this period. Initially, the region around 500 to 505 acted as a strong bounce-off point in late April/early May 2024. Following a significant dip in April 2025, where SPY briefly touched the 480 to 490 range, we saw an aggressive recovery. This recovery validated the strong underlying demand, pushing the price back above the 500 level almost immediately. More recently, the area between 630 and 640 has served as a critical short-term support zone, notably in late July and early September. Each time the price approached this zone, buying pressure stepped in, preventing a deeper correction and maintaining the upward trajectory. Current resistance levels are, quite simply, the new all-time highs we are witnessing. The previous peak was around 649 to 650 in early September, which was decisively broken in the last 2 trading days. Today, SPY is pushing towards 659, establishing new psychological resistance levels with each increment. The move from 652 on September 10th to 657 on September 11th, and then to 659 today, is particularly telling. These recent strong bullish candles, especially on September 11th, correlate directly with the news about clearer paths to Fed rate cuts and continued AI sector strength. Volume has also been consistently high during significant upward moves and pullbacks, indicating strong participation from both buyers and sellers, though buyers have clearly dominated the overall trend. Transitioning to the 1-hour chart, let's observe a more granular view of price action from the last week of August into early September 2025, which is the most recent data available at this time frame. In this window, we can identify a period of mild consolidation after a strong August, with SPY hovering primarily between 642 and 648. There are noticeable hourly candles around August 29th and September 2nd showing some volatility. On August 29th, after a dip below 644, the price recovered to close near 645, indicating resilience. The beginning of September, specifically on the 2nd, saw a more pronounced movement, with the price initially falling from 644 before rallying back to 640.33 by the end of the available hourly data. This one-hour perspective helps confirm short-term trading ranges and shows pockets of both buying and selling pressure within the broader daily uptrend. While this specific data ends before the major news events of September 10th and 11th, it illustrates how the market navigated through earlier periods of uncertainty or minor corrections within an overall bullish environment. For the most recent and critical price movements, let's switch to the 15-minute chart, focusing on the strong bullish day of September 11th, 2025. After an initial consolidation phase in the early morning, the 653.00 level acted as a strong intraday support point before the major rally began. From approximately 1326 Universal Time Coordinated onwards, SPY embarked on a clear, sustained upward trend. Each 15-minute candle during this period is predominantly bullish, showcasing consistent and aggressive buying pressure. The price successfully broke through minor resistance levels around 654.50 and 656.00 with remarkable ease. Volume remained robust, particularly during the breakout above 655.00, indicating strong institutional and retail participation. This sustained climb, with very few significant pullbacks, clearly suggests a highly confident market reacting positively to the news of anticipated Fed rate cuts and the ongoing AI-fueled rally. The price ended the day at 657.63, a significant jump, preparing for today's further ascent. Returning to our one-day chart, the long-term outlook for SPY appears predominantly bullish. The fundamental shift towards anticipated Fed rate cuts, combined with the continued strength in the AI sector, provides a powerful tailwind. However, the extreme overbought signal from MarketWatch is a short-term caution. A healthy market often experiences pullbacks after such extended rallies. In the short term, a pullback to retest the recently broken resistance around 650 to 652 could be a buying opportunity, especially if it coincides with lower volume. The support level at 630 to 640, established in previous months, remains a critical area to watch should a deeper correction occur. For traders, entering long positions on minor dips, with tight stop losses below immediate support levels, could be a strategy. Conversely, those looking for short opportunities might consider them only if there's a clear breakdown below 650, accompanied by high selling volume and negative news catalysts. Key upcoming events include the Federal Reserve meeting next week on September 17th, which will provide further clarity on rate cut decisions. Any hawkish surprises or signs of stronger than expected inflation could trigger a swift market reaction. Also, keep an eye on corporate earnings reports, especially from key tech companies, as AI growth continues to be a major market driver. Unbiased predictions suggest that SPY has a 70% likelihood of continuing its upward trajectory towards 665 to 670 in the short term, provided the Fed's stance remains dovish. A break above 660 would reinforce this likelihood. However, there's a 30% chance of a short-term correction to the 650 to 652 range, especially if profit-taking ensues or if the Fed hints at slower rate cuts. A breach below 647 on increased volume would reinforce the bearish case for a deeper correction towards 630 to 640. In summary, the important price levels to watch are the immediate support at 650 to 652, followed by the stronger support at 630 to 640. On the upside, 660 and then 665 to 670 are the next psychological resistance targets. The market is driven by expectations of Fed rate cuts due to a weakening labor market, despite sticky inflation and the ongoing AI boom. Look for confirmation from the upcoming Fed meeting and continued strength in the tech sector. As always, manage your risk, stay informed, and make sure to subscribe to Explain the Charts for more in-depth market analyses. Thank you for watching and happy trading!